Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and today we're going to trade some Fibonacci retracement levels and do a complete market scan. If there's any market that you would like to look at, drop it in the live chat either on YouTube or in the How to Trade Trading Room, and I'll go ahead and run up the analysis. We're going to begin with Bitcoin. I think that's very important that we look at Bitcoin, also the Euro, Great Britain pound. We had a trade idea out there. Gold, we've got to look at gold. A lot of questions on gold and silver definitely have come my way in the last 24 hours or so. So I'm definitely going to look at those. If there's anything else that you guys would like to look at, go ahead and drop a line. Got my Montana Grizzlies sweater on. We've got the big game with Montana State tomorrow. It's one of the biggest of the entire year, so I'm stoked. I'm ready to go. Ticket prices are not cheap. A spike in ticket prices has definitely blown everybody around here away. I'm fortunate. I have season tickets, so I'm right up over in there. So if you're watching on TV, I'm sort of right in that area behind the student section. It's going to be a lot of fun. A lot of people are really excited about it. So I decided, I said, hey, I haven't worn the Grizz gear all year long. I'm going to go ahead and wear it. I'm an alumni of 2002. I've got friends that have gone there. We know people in the program. Family's been around the program for a long time. So it's going to be a good time. I'm looking forward to it. Cat Grizz Week's always exciting. So if you're a football fan and you've got like your favorite rivalry game, just imagine that. If you're not a football fan, then don't worry about it. That's for sure. So good to see everybody back. Tina, good to see you, Tina. Welcome. Steve wants to look at the CAD, the dollar CAD. Yeah, we'll look at the dollar CAD as well. Lita, how you doing, Lita? I'm confident everything's going well. Bobby Bob, WTI as well, retracement for the bearish. Okay, so we're going to look at the Great Britain pound. We're going to look at WTI. We're going to look at the Canadian dollar, gold, Bitcoin, whatever you like, pretty much. Let me see. Tina, good luck with your team. You look so excited. Yeah, it's going to be a lot of fun. Like I said, I'm fortunate. I buy season tickets every year, so I don't have to worry about the big prices. But, man, the tickets are like $500 a piece, $300 a piece, so it's going to be a lot of fun. I'm looking forward to it. I get a little intense on game day, though, so I can't let that into my trading. All right, let's get right out to price action here. I want to start with Bitcoin because it's absolutely imperative that we understand what's going on with Bitcoin. Big time month, right? 22% big time sell off, and what we're seeing now is a lot of the retail longs are getting crushed. I really like our level. I drew this Fibonacci retracement sequence to really show where we've been in the last couple of years. You can see right there, June of 2023, sort of a real ugly situation down around 25,000 or so. And the price has just absolutely exploded in what I would call a relatively perfect Elliott wave count. There's a 1, 2, 3, 4, 5, and now we're sort of correcting and basing out. I think we've got a pretty darn good chance to catch the bottom of this thing. I really do. I don't see this going down to where everybody sees it. A lot of people are saying 60,000, 75,000, 80,000 was the call in the room, in the How to Trade trading room, I believe, somewhere right in that 80,000 zone, and that may be correct. The low right there's 80,537. So an absolutely fantastic call. My lines have been under pressure. My support lines have been under serious heat. I loved 87 up there. I loved 85. I still like them. I mean, you're back up to about break even. But let's take this down to a weekly chart. I'll show you exactly where we're at. The weekly has been interesting, hasn't it? I mean, just an absolute huge move over the past month or so. We've seen divestiture in crypto reaching levels we haven't seen for quite a while. And when you start to see crypto sellers in the market, you wonder about the risk appetite for everybody else. So let's go back to that monthly chart for a second and really just focus on the current wave that we're working on. Really a nice leg up that developed last spring after the big tariff crash, and now we're sort of coming off a bit. I was reading stories about somebody liquidated something like 2 trillion or something. It was some crazy, astounding number of Bitcoin, something like that. I didn't know the market cap was that big, but clearly it is. What I'm thinking, though, is this a big-time correction? Do I think it's going to stay here very long? No, I don't. So, I mean, the net longs for me from 85 are pretty good. They look pretty good to me. Today's close is going to be a big deal, though. If you get that close back up above 85, there's a good chance you're going to start creeping back towards that 100 level. If you do not get that weekly close sort of above that zone, and we're right around maybe 82.5, then we're going to be very vulnerable over the weekend. Don't be surprised if we're going to make a run at that low, and that low down there is about 74, 75,000. So I've got a close eye on this crypto market. I would be really surprised if we don't get a bounce up into the early 90s, at least mid 90s from this level, but it's not happening yet, and there's definitely a lot of heat on this market. Let's get over to Ethereum. I know a lot of you trade Ethereum. Sort of an interesting level that we're on right now. Monthly chart, nice big run up, nice sell off, the Fibonacci retracement. That's called the golden zone. You notice I have it shaded golden there from the 50% level to the 62% level. That area is called the golden zone. So when we look at this, we say, okay, what does that mean? It means that right now it's the last stand for this monthly uptrend for Ether right there. Boom. Nice big move. Okay. Now you're sort of pulling back, and you can see that 62% is under pressure at 2750. Big time zone. This is a key level. Now, if you're long from this 2750 level, I tend to agree. If you're long from that 85 level in Bitcoin, I tend to agree. That being said, the heat is on. There's no question about it. There's no question about it. A lot of it has to do with interest rate expectations. We're going to talk about that in a minute. But as far as finding a finite market driver of what exactly is happening to big tech and crypto, sort of all of a sudden there's a serious correlation between the recent sell-off in the NASDAQ and the sell-off in crypto. A lot of folks believe it's all about the AI bubble bursting. I don't think anything's burst. I really don't. I mean, we would see a much different price action. You go, Shane, it's off 30% in a month. And I go, yeah, but it can also go up 30% in a month. So we're talking about Ether and Bitcoin and all these different things. I'm not too worried about it. I'm really not too worried about it. So I definitely want to make sure that we understand that the sky isn't necessarily falling per se, but it definitely is not necessarily the best situation if you're holding. And right now we've got sort of a live one in the Euro Great Britain pound. Let's get right out the price. And right now we've got sort of a live one in the Euro Great Britain pound. Let's get right out the price action. And you can sort of see where we drew the Fibonacci line in the sand. There it was, the 87, 85 level, somewhere in that zone. Pretty good stuff. Pretty good stuff. I really like that support zone. I think we've got an opportunity there to make a few bucks. We're officially long from 87.94-ish, I believe, was the key level that was put out. And we're looking for about 88.44. So essentially what we're intending to do here is get a bounce off of the Fibonacci right up to this 44 zone, which should be right in here somewhere. Somewhere, it's 17. Let's go up to 44. Right in this zone. So we are sort of taking a position in this market. Feel pretty good about it, really. You got sort of this tail up here. Been a real negative month. Would not surprise me if this market trades sideways for a while, just because we're starting to get into a situation where central banks are going to be a little less sort of apt to move their interest rates, especially if the Fed does what we think it's going to do now. And right now, I would be surprised to see the ECB or the Bank of England make any moves at the next engagement. I really would. And if that's the case, then we're liable to see some sideways trade here. I feel pretty good about it, though. I think you're going to have a decent opportunity maybe to go up there and touch that one. If you wanted more of a conservative trade, you could definitely be shooting for something like this down in the 88.20 range. Just remember, this is a very, very tight market. I think that this, if in fact you're going to see some bids hit this thing towards the euro, then more than likely it's going to happen from this zone right here, 87, 85-ish, 87, 75-ish, somewhere in there. The big reason why is those CPI figures that we talked about earlier this week. The biggest thing I would be hanging my hat on was the inflation figures for the EU came in sort of as projected, and in the UK, they sort of ticked a little bit higher. In my view, that's the reason for your big sell-off sort of this month and this week. It was all about those CPI figures. The idea is like, well, maybe the BOE is going to raise interest rates. Well, maybe they will, maybe they won't. I think it all depends on what the Fed does. Cut interest rates. It all depends on what the Fed does. I think that you're going to be in a situation where you're going sideways. And if we go sideways, we've got a great chance to win this trade. So we're monitoring this. This is going to be a true swing trade. It may take a week before we get any sort of action. The Euro Great Britain pound always has a history of settling into a definite rotational thing. Yeah, we've been having trouble with Cloudflare all week. Tina, I really don't know what to say about it. Let's go ahead. We're rocking on 5 of our 6 channels. And yeah, it went off on X for some reason. My guess is that it is some sort of Cloudflare issue. There's been issues all week long. There's no question about that. And all we can really do is just bear with it. But I've got the live chats up and running. So if you're coming through, I'm seeing it. Should be an interesting type of a scenario. I mean, the hacking event on the Cloudflare this week has been absolutely brutal. It's been really brutal. I can see it flickering on the restream. So we're only up on 5 of 6 channels. Typically, we're up on 6. Well, that's life. We'll do what we can. I know that we're still live. We should be still live in the How to Trade trading room. I know on my end, my internet's good. We are dropping some frames, though, so there's definitely a connection issue. More than likely, it's more Cloudflare issues. For me, that would be on the west coast of the United States. So we're going to do the best we can with these technical issues and keep it moving forward. So that's a good look at the Euro Great Britain pound. If you're interested in gold, I mean, I got a lot of questions about gold. And we sort of had this discussion earlier in the live chat. I was like, okay, what's happening with the gold market? I'd say, well, you're getting a bit of a correction right now. You're sort of forming a couple of dojis in a real tight market, right? Just beneath 4,100. Is this a couple to handle? And I believe that the conversation, yeah, MTM, there's glitches today. I mean, there's not really much I can do about it. We are dropping frames, though, so I'll do the best I can with it. We've Cloudflare issues all week long, all week long. In any case, right here, there's your cup with a handle. You can see right this zone. The question was, and I believe it was Bluefin asked me this, said, Shane, is this a cup with a handle on the daily? And I said, yeah, I mean, technically it is a cup with a handle. You've got basically a top here, you've got a pullback, and then a top here, and now you've got your handle involved, right? Well, the situation is this. It's not a great cup with a handle. If you're looking for a great cup with a handle, this silver market is a better cup with handle. And essentially what that is a double top followed by a period of consolidation that's sort of in the upper quartile of that second run. And so as we look at these patterns, we say, okay, what does a double top mean? Well, a double top means that you're going to see potentially an area of resistance right around 55 here, in this case 55 for the silver market, and you're also going to see a little bit of action probably to run up and test that double top. So this is an incredibly tradable market. I talked to a trader earlier today. Said they were net long. They got in before the big run up back in October. That's great. Still, though, you really wonder, is this market going higher? Personally, I see it moving higher, but the interest rates are definitely shaking things up. Now, I'm going to get into that in just a second, and we'll notice that, yeah, there is reason to believe that the Fed isn't going to cut interest rates in December like we thought, and the probabilities and the way those have changed in the last week are unbelievable. They're absolutely unbelievable. So I'm going to show you those in a second, and that's one of the reasons why metals are struggling. It has nothing to do with any sort of uncertainty really leaving the equation with regards to geopolitics. Russia-Ukraine still raging on. You're also seeing U.S. military could happen this week in the Venezuela thing. Sort of we all forgot about it. Now we're starting to see that maybe that's going to happen here in the next several days. We don't know. Those are two areas that are likely to force the metals very, very high. So when I look at that, I say, okay, no geopolitical uncertainties really come off the board. Now what do we have? We have monetary policy uncertainty. Does that drive metals higher or lower? That's a tough one. That's a tough one. You want a dovish dollar. You want rate cuts to drive commodity prices, especially metals, higher. We're not going to get it in December. I don't believe we're going to get it. I'm going to show you the odds here in a second, and maybe you'll agree with me, maybe you won't. But there's a lot going on at the Fed right now, and I don't know that rate cuts are even remotely involved in the equation. That's for sure. In any case, this is a double top right here and a cup with a handle. This is a very nice cup with a handle in silver. So what does a cup with a handle mean? Typically, it's a bullish type of a scenario. Basically, you tested a high, you had a great pullback and sort of based out, then you had a ferocious run up. That area acted as resistance, and now you're starting to get the compression. And right in here is where the battle's being fought. This is where the buyers and the sellers are duking it out to decide if this market's going a lot higher or if it's going to stagnate and maybe come back down and give some of these gains up. That's what the handle's all about. The handle's about compression. It's about buyers and sellers. Excuse me. It's about buyers and sellers not actually being able to determine which way this thing's going to go, meaning nobody's winning. So if nobody's winning, what can we really assume? We can't really assume anything. We've got to wait for this market to break. So if you're trading this candle with cup, you're looking for a breakout probably above that upper trend line right there, and then boom, you're looking for the long, a test of the double top, and then extension. One of the great things about these patterns is when they do form, and it does take a while for these things to form. I mean, take a good look at when this thing started back in October. It's taken a month and a half to form. Once it sets up like this, that tells us that, hey, this is what the market's thinking. It doesn't want to push higher than 55, but it was still, there's enough interest there, enough buyers in the market to prop this thing up and maybe test the waters up there. That's the idea behind a double top. Excuse me, not a double top, but a cup with handle. Now, a double top is a little bit different in that typically you get a sweet resistance zone right there off a double top before it finally breaks. And once it finally breaks, then you're buying pullbacks and it's off to the races and a lot of fun. That's for sure. So we're going to be watching silver closely. I think that silver is a bullish type of a market, but are we really sure of what's going to happen? No, we're not. Not yet. Okay, as far as this gold pattern, I think the gold market is a lot different. I think this is not a double top. This is sort of a lagging cup. I don't know what you'd even call it. Somebody messed up in pottery class. The cup doesn't look very good at all. So to me, I would say, yeah, that does qualify as being a cup with handle, but I don't like it. I would like to see this up here. It doesn't have to be exact, but I would like to see it up here towards the top. And that would give me that more confidence at that double top area. Yeah, we're going to revisit it, and yeah, potentially we're going to break it. This right here, go to a weekly. You start to see a lot of things develop that you really start wondering about. What is this on a weekly? And we have no indicators up there. Just read price action with me for a second. What is it? It's an uptrend, clearly. Look at all those winning weeks. Now what's happened? All right, wiped out some retail longs, clearly. Now the market's getting real tight. It's getting real tight. Why is it getting real tight? Because we don't know which way we're going to go. It's all about uncertainty at the Fed right now. So this right here, I mean, if you really wanted to spot patterns, I know this is a Fibonacci stream, but if you're looking for patterns, it's a bullish pennant, essentially, on the weekly. Boom, there's your run. And then if you're looking for your triangle, you're right here. Grab your triangle, something like that. There it is. So it's not the prettiest thing in the world, but it is. So when we look at this, you'd say, okay, so how do I play this? I'd say I'd be waiting for a breakout above probably this upper trend line, the one that connects these two. I mean, if you just wanted to trend line trade this thing maybe next week, and you're saying, okay, Shane, now what am I going to do next week? I'd say, well, it's a decent trend line. It's 2 weeks, 2 touches. The third touch is everything. So we haven't gone up and touched it yet. If we go up and touch it early next week, which more than likely we will, and if we retrace from that and it acts as strong topside resistance, then we've got something. That means that maybe the market is going to start trending down a little bit. But if we break that and close above that, then we're off to the races to our 5,000 targets, our 6,000s, whatever, to the top side. Interesting type of an area when we're just looking at gold with no other indicators. Now, if we go to our Fibonacci's, the way forward becomes very apparent to me. Very apparent. And when you take a good look at what's happening here, this is the line in the sand. 4,000's huge. So right now we're trading about 4,081. 4,000's huge. This zone right down here, 39.75. That's a monster trade. If we get another chance down in here right around 4,000 and 39.75 to buy the market by the end of the year, I think we do it. I really don't think there's any hesitation, any reason to hesitate there at all. That's a pretty darn good support zone for your gold market. So for silver, if you want to use Fibonacci's on silver, we've sort of got an interesting double top, and we've got all that analysis. Does that line up at all with the Fibonacci's? Well, let's have a look. Fibonacci's here. I've chose a different wave, at least for this analysis. Spike low there, spike high, and then your pullback on your weekly went right to 62%. That's a pretty good sign if you're a bull. It really is. Remember, an uptrend is valid when you stay above 62%. It's technically valid, and when you're above 38%, it is very strong. That's absolutely key. Absolutely key. So we're definitely looking at that. I think it's a pretty good trade. Is it a good trade location to buy right now? I would wait on silver. I would really wait for that cup with handle to work itself out. Probably give it next week. Remember, next week's going to be a holiday week, so you're definitely going to want to be aware that it's not going to be as active as we have seen. Monday and Tuesday will be good. Wednesday, Thursday, Friday, probably not so much. Probably not so much. So definitely keep an eye on this chart, though. I think it's a pretty good one. As far as the macro look, I mean, if you want to step back, sort of get in that way back machine and take a look at what's happened to silver, this has been a very good market. No question about it. A lot of the folks that piled into silver, they always call silver the poor man's gold. Well, I mean, it is because it's a little bit cheaper, but the potential for gains in silver, you'd have to say, well, I mean, they're pretty good. I mean, that gold-silver ratio, what is it, right around 90, something like that? Well, if that's the case, you're going to see that gap come in, and it probably isn't going to be gold being sold off. I would imagine silver to the top side is probably a pretty good play. Spike low right there, though, and you can see right there is your double top that you sort of have set up really beautifully right at 55. 44 would be a great buy. Nobody really wants to go for that ride from 50, so just sort of lock down and sort of see what happens here. But I like it. I like it as a bid, a potential bid, and think it's a good market to look at. Okay, let's go ahead and get on with the Great Britain Pound USD. That was one of the others that we asked. Interesting. I mean, you sort of have this monthly level. We've traded beneath that moving average and that 38% zone, so 130, 150-ish. Let's go down to a daily and see exactly how this trade unfolded. I'm at that level. Not real great. Came off here, boom. There was your first strike back in August, and then you sort of rallied. So that was fantastic. So the second time through, not real great. Not real good at all. We've got a little bit of compression. There was some good high impact scalping you could have done right there for a few ticks. I mean, that was a decent trade. Your low was right on 130.140. Your high up there was about around 132.19. So, I mean, that was theoretically a pretty good trade for 70 pips, 79 pips. But now you're sort of compressed, and then you broke. But we're rotating right up. And we've been talking all week long about the point of control. What that means when you have a line in the sand and price goes above it and it can't move, and price goes below it and it can't move, and that point of control just acts as like a suction. It's absolutely key. Absolutely key. So when we're looking at something like this, where you have a finite line in the sand, which is that 38% level on the weekly, right around 131.50, 131.44, the rotation is very real and it is on. So right here, am I bullish or bearish? As a scalper, I probably would be buying. Looking to grab a few pips up above 131. As a position trader, it becomes very apparent what needs to be done here. You almost have to play this to the downside and be patient because we have a couple of indicators. We've got an EMA right there, 130, 134. Okay, that's pretty good. And then our key level, which is now we have to consider it as resistance. What once was support is now topside resistance. You're looking at probably 130, 143. So this 10, I would say this 10 pip zone, get rid of that for right this minute. This 10 pip zone right in here, more than likely is going to be robust resistance. Now there's one more key to or piece of cake or something, or key to the combo that we need to look at. And that's going to be your daily fibs. Nice Fibonacci retracement. Swing high right up there, spike high down there to a spike low, and now a pullback somewhere right up in here to the 62% range. I think that this area is robust topside resistance. Right in that zone. So the resistance zone is going to be 130, 135-ish, all the way up there to about 130, 147. That's going to be about 12 pips. So you could be looking for like a 1-to-1 scalp there, maybe to the downside, maybe a 1-to-2, 1-to-3 if you wanted to take a position. I really don't have a problem with it. I think it's a pretty strong resistance zone. I would be very surprised if we freight train through that. I really would. Sort of the idea here is that maybe the Great Britain pound overreacted a little bit from that CPI number earlier this week. I think that's very, very, very real. So I'm watching this closely. I think that you have an opportunity here potentially to get a trade. You can see 38% on the daily is held up beautifully. I mean, you've got a nice scalp there, but I would wait. I'd be patient for that rotation back up into here probably early next week. You'll have an opportunity to attack the Great Britain pound USD. All right, we had a question on the Canadian dollar, the dollar CAD. Interesting type of a scenario here. We've been watching the dollar CAD for quite some time. And the reason why we've been watching it for so long is because of the correlation with crude oil. I say it every single time we talk about the Canadian dollar, but remember, the Canadian dollar goes with fossil fuels. Natural gas, crude oil, about 7 to 9% of Canadian GDP comes out of fossil fuels. 90% of those exports go to the United States. That's why a U.S.-Canada trade war is such a touchy thing, especially with the energy trade and the Canadian dollar. So when we're looking at the Canadian dollar, we're saying, okay, what exactly is happening here? Well, you got a nice comeback in the past several months. You had an immense sell-off really beginning back in February, and a lot of that had to do with tariff concerns and all sorts of different things that the dollar was going through. And now you're sort of seeing the dollar make a comeback. Well, interesting. How do we trade it? Well, you're at 141 flat. I mean, I'm probably bidding if I get a chance to bid, but I'm not doing it from here. I'm probably doing it from down around 38%, right around 140.17, but I'm damn sure want to be a net seller up there at about 143.13. I think that's absolutely huge. So if you're interested in potentially taking a Canadian dollar trade and want to be patient, this would be on my radar for the next several weeks. 143.13, 200 pips away. Still may get a shot at it. We just got to wait. If the Fed doesn't cut interest rates, and I'm going to show you that in a minute. We're going to get into that in a second. But if that's the case, you're going to get a chance to sell up there, and that's going to be a pretty good idea. Very good idea, I think, in the short run. Now, as far as what we can do right now for it, I mean, a daily chart, if we're looking at Fibonacci's, I love to leave the different time frames up. Now, admittedly, this is a more advanced type of a way to use Fibonacci's. To be real honest with you, I haven't seen anybody doing this type of work on the internet. I haven't, as far as Fibonacci's go, and that doesn't mean that it's brilliant or genius. I don't know. I mean, indicators are indicators. Believe me, you can be a wonderful trader at the 9 EMA or the 920, and what it boils down to is understanding market state and when to trade and when to pile on the risk and when to hold it back. And that's what makes a great trader, not the indicators. The methodology itself is what everybody's hung up on. You don't need to get so hung up on it. Get hung up on your own psychology, the way that you do business. And that's what can really help you in these markets. In any case, right here, you got a sort of a spike low right there and a spike high. Fantastic. So what am I looking for here? Convergence. I'm looking for something called commonality. I want to see these levels line up in the same areas. You say, Shane, you're looking at a daily against a monthly chart. Who cares? The monthly chart gives us an idea of what's happening in the macro sense. The daily gets us more current. Now, we could even go down to a 4-hour chart. I'm not going to do that because we have a daily doji. I don't really see much point of that because it's very tight. Right now, we're trading 141. So but you have a potential entry at 140.69, 140.72, somewhere down in there, really a nice sweet buy. Maybe get a bump off of that level. That could be very good. 62% down here is interesting, 140.31. Look at that, 140.17. So what am I getting at here? The monthly 38%, an area that we've already broke, and our daily 62% are lining up. Now you say, Shane, who cares? Well, a lot of it speaks to the fractal nature of markets, meaning the idea that fractal geometry, large waves are made up of little waves. And when we see these levels line up, it shows that we actually do have an order to the market and that maybe a trend really is a trend and maybe a flat market's really a flat one. In this instance, we're just looking for participation. We're thinking, okay, the bidders have been in the market. They've been there. We broke through that monthly 38 and we went higher. Okay. Now what? Well, the daily's pushing higher. Last 3 days have been pretty good. Are we trending? No. We're not trending. We just got rejected, that upper Bollinger Band. Now we're sort of rotating back down into the guts of this range. We've got a tremendous order block here. We pull back down into this zone. We got a really great chance to hit a live demand zone, which means there's more than likely going to be bidders there. Why would there be bidders there? Well, we broke through the monthly 38. We pulled back, right? The bidders were there, drove the market higher. Now you've got a 3-day winning streak. And you're thinking, okay, so the bidders have really defended this level down here. What about sort of the constitution of this last 3 days? It's clearly bullish. It's not very strong bullish, but it's still bullish. If we get a pullback down here to 62% and challenge this trend, there's going to be traders out there that believe that, no, we're in an uptrend, and they're going to step in and bid. And then you've got this big level right here, 140-ish. They're going to say, yeah, that was a huge level. We already broke above that. There's going to be some more bidders there. And to top it all off, you've got 140 and a quarter to 140 even. Sort of a big round number type of a thing. So, that's basically what we're looking at. That's the idea behind the fractals and the Fibonacci's. We're trying to establish proportionality within the framework of price action on a given chart. Now, that's hard. Those words are hard. That concept is hard. I get it. Believe me, I get it. I sat there with the young lady from the Business Insider when we did those pieces on Fibonacci retracements, and I showed her exactly how I traded. And I attempted to explain the concept of commonality in multiple time frames to her. And it was no knock on her. She just genuinely didn't understand what the heck I was talking about. There's a lot of you out there right now that don't understand what I was talking about. And that's okay. That's okay. The key is, if you're interested in Fibonacci's, you just start working with the retracements, and after a while, you'll start to see how things line up. What's important is that you pick valid highs and lows. So take a good look at what we did here on this dollar CAD. Valid highs and lows. What is this? It's the yearly range. February's high all the way down to June's lows. Then we're chopping back in. So this is your yearly range. It's very important. Very important. Then we go down to our daily. Okay. Well, we've got a spike low here, and we've got an upper extreme today. We're measuring the distance between those 4 days from that trough to that peak. So if you're going to begin with Fibonacci's, start looking at swing highs and swing lows, figure out which ones are important. I recommend staying as current as possible, but also those longer term time frames, especially if there's a big, beautiful wave there, you probably should be looking at those too. Something to think about there. Interesting stuff, though. I mean, as we look across the markets today, we're seeing a bit of a rebound in the Dow, the 500. I'm curious to see if the Dow can hold 500. I don't know. We're seeing gold sort of rally a bit off of yesterday's lows or this morning's lows, but not really getting any strength to the upside. And as far as crypto goes, crypto's just sort of dead. 84, we're printing 84 in Bitcoin. We're printing 27.45 in Ether. Shiba Inu, we're probably going to be talking more about that next week. I love like a buy at 5.5 there. We'll save that for later. But this right here is an interesting market, this dollar CAD. Very, very interesting. All right, we got a few things to go over here today. It looks like our live chat's not working. It does not surprise me. We have been fighting. We have been absolutely fighting with Cloudflare all week long. So I mean, if you're typing in questions on the YouTube feed and you're not getting any answers, my apologies. It just isn't happening. I'm not seeing anything at all. All right, so yeah, right there, one just came in. What do you think about Bitcoin's next move? Well, I mean, it's a great question. I mean, it really is. I tell you what, we'll talk about Bitcoin in just a second. There's a few things that we'll go over here. Friday, not much today. S&P Global PMI, it's a non-starter. Consumer sentiment, what does it really mean? S&P Global Manufacturing PMIs and things. I mean, these are just really aren't key numbers. They've got a 3-star event by their name, and they just don't mean much. So I wouldn't get too stuck on these. As far as the Atlanta Fed GDP now, I wouldn't worry about that either. 4.2%. I believe we saw that one the other day. Michigan Consumer Sentiment Index, this used to be a big-time number. It's not anymore. People sort of look at it and go, it's survey data. We're not interested. 1-year inflation, that's interesting. People actually see the 1-year inflation coming down a little bit. I don't see that. They see 5-year inflation actually coming down. I don't see that either. Michigan Consumer Expectations, that means are things going to get better or worse? You're right above 50, so that means that half of the people believe it's going to get better. Michigan Consumer Sentiment, same basic thing, 51. Anything over 50 is technically sort of bullish or positive, but it's not very positive. Remember, those consumer sentiment numbers were up in the 80s before COVID. I sort of make the case that we've never recovered psychologically, that the markets have never recovered and the people have never recovered. And we have a lot of evidence to show just that. A couple of things that we do need to talk about, though, from a sort of a news standpoint. This was the big story this morning, and this is interesting because one Fed official may have saved the market from another route. John Williams' remarks matter so much. Basically, John Williams is the New York Federal Reserve president, came out earlier today and said, yeah, I think we need another rate cut this year. We're still in restrictive territory. We should definitely cut. And it's funny because all it took was him saying that, and our expectations flipped completely. Yesterday, we were looking at about 70% that we were going to hold rates static, and now it's 70% that we're going to get a rate cut. This is absolutely unbelievable. Let's hit refresh. Maybe those odds have changed. I mean, this is an incredibly dynamic situation, and now the markets are really leaning on a rate cut in December. I don't believe that's going to happen. Now, unless somebody knows something, and Williams was the one that was going to tell us exactly what the Fed was going to do to try to keep the markets from falling absolutely apart, then I think this is all hearsay and wild speculation. But really the important thing to remember here, this is the important thing. Okay, right there now, we're expecting a 73% chance of a rate cut in December. A month ago, it was a 98% chance. Yesterday, it was only a 40% chance. This is obscene, the volatility in our interest rate expectations. This is as much uncertainty as I've ever witnessed in the last probably 10 years on what the Federal Reserve is going to do at a given time. Nobody knows what they're going to do in December. There's a lot of reasons why. The government shutdown is a big one. The narrative from the Fed and the Fed members have been, hey, we don't know what's going to happen. We don't have any data. We haven't even seen the jobs data, the CPI data. We don't know what's going on. We need more information before we can move interest rates up or down. That's been the narrative. So for John Williams to come out this morning and say, yeah, I'm thinking we can cut again, that may have been a signal from the honchos at the FOMC saying, yeah, the cut's back on. And that's what you're seeing right now in the markets. No question about it. That's the reason for the bullish sentiment. It's not the S&P Global PMI, and it damn sure isn't consumer sentiment. So this is an interesting dynamic. Okay, so we're going to hit Bitcoin, and then we'll finish with WTI, Bobby, and then that'll be a wrap. As far as what do I think Bitcoin's going to do next, Martin, I think we're going to trade higher. I really do. But, full disclosure, in the contest, I'm holding longs from about 87. I'm in that contest over here, and I'm not going real well lately. I'm long tech, but I think I got pretty good trade location. We'll see how it pans out in the next week or so. But this right here, this area, this is a key zone. This is a key Fibonacci retracement zone, and I think that it's absolutely imperative that we understand the big picture here with Bitcoin. The uptrend is still very much intact. However, the heat is on. You're off 23% this month. 78% is a big deal. 85,000 is a big deal. If you get a close above that today, I think you probably trickle higher. If we extend losses, and right now Bitcoin is off about 2.75% on the day. If we extend these losses going into the weekend and potentially next weekend's holidays, I don't know. We could be flirting with 75,000 very, very, very quickly. So I am holding demo longs basically. I'm confident 85 is going to stand up. I expect this to trade back up to that 94 level, and I expect it in the next couple of days. But that doesn't mean it's going to happen. And so right now, as far as a stop loss on that trade, if I'm buying 85s, I'm watching 80 closely. I think that if 80 goes and you see 80 wash out down to 79, 78, then you got to pull the plug because you probably are going to 75. And once you get down to 75, you got to remember that the heat is on right now. In any reason to bail out of positions, retail traders are bailing. They're saying, well, okay, we've made some money. We're going to take it off the board, and then we're going to look for a better trade location. What are those trade locations? Let's say that, okay, I'm tired. I've got, I've been saving my pennies. I've got a couple 100,000, or let's say I've got 10,000, and I love Bitcoin, and I want to buy some Bitcoin. Is now the time to buy Bitcoin? It's pretty solid. When you go to the bottom of that wave, that bottom of those trough lows down around $15,000 back in November 2022, I believe I made a YouTube video in June of that year. It was somewhere down in here. Yeah, it was right here, June, right when things were really getting ugly for Bitcoin. Outline this as being a potential bottom. Go back on Forex Signals TV. It's right there. You can see that this zone down here, we have exploded since then. Not because I wanted it to, just because that's the way it went. So now we've got this massive move from 15 to 125. And now we're pulling back. 38% at 84. Big time zone. Big time zone. If you break this, 70, it won't be enough just to go to 75 and bounce. It'll probably go to 74, 73, 72.5. 77.5, you may see bidders defend 75. I'd be shocked if they didn't, but the bidders haven't been able to keep a lid on this thing yet, this sell-off. Be very careful with Bitcoin. Those are pretty good entries, though. So my question to you is, if you sat around and you saved your pennies, He said, all right, I'm making a play on Bitcoin. It's now the time to make that play. Not with this much Fed uncertainty. You wait. Maybe you get a shot at 70. It can happen. It really can happen. There are no rules. Remember that. When the market starts moving, there are no rules. 50's right there, 62% down to 57. Those are beautiful. That's when a lot of the institutional traders are going to step up and say, okay, is this worth 100 million from here? Is this worth 150 million from here? That's no kidding. So I'm watching Bitcoin closely. I think that's an interesting macro wave. It really does sort of emphasize the Elliott waves that we were talking about. I like that one, that level a little bit better just because it's sort of your downside peak. But you could definitely be bringing it up into here somewhere if you wanted to. It just depends on what you want to get accomplished. To me, that tells me everything I need to know. That really is the Bitcoin run from 22 all the way to 25, and now the big correction. All right, let's take a look at WTI crude oil, and then we'll call it a day. WTI is just, the more things change, the more they stay the same. This is a good look at the futures contract. December WTI crude trading 59.14. U.S. oil still trading about 57.84. We'll focus on U.S. oil for right this minute. You've got sort of an interesting dynamic here. The price is coming off. And I've sort of been an outspoken critic of crude oil. I thought that, we were definitely in bearish season. We should be looking at the downside of this market. And right there's your double bottom. So there's your double bottom right around 55, 15-ish, 55 even. And it's coming into play. So for us, the question now is like, okay, are we bidders from down there? Yeah, probably. That's going to be a great scalp, 55 and a quarter. I mean, that would be an absolutely hot zone. I would be surprised if you didn't get at least a 25 or a 50 pip bounce on that. So let's go ahead and just mark that on our chart, 55 and a quarter. Something like that is a counter trend bid. Absolutely. Right now, do I want to sell? I would say, yeah, more than likely you're going to want to try to get short, but you got to be really careful with that. And we've been sort of timid in this market because the idea of the Venezuela strikes is really messing things up for us. Now the hawkish Fed, the Fed that may hold interest rates static instead of cutting, sends crude oil lower, puts a lid on commodities. But if you see a military strike over the weekend against Venezuela from the United States, crude oil opens gap up and we're in big trouble. So I can't really tell anybody to hold shorts here because it's the right thing to do, but it's risky. If the wrong geopolitical event happens, crude oil goes to $65 overnight, you get wiped out. So I can't really recommend that, especially with the Venezuela strikes. And also, there's Mexico strikes on the table against cartels. There's so much going on right now, you genuinely don't know what's going to happen next. So when I'm looking at this 58.71, yeah, that's a pretty good trade, probably a sell for Monday if you do get a bounce, maybe even a late day sell if you get, a dollar, maybe news comes in. Maybe traders want to go home long crude oil and bet on the strikes. You don't know. If that's the case, I would scalp up there from 58.71 later today. I really don't see a problem with that at all, looking for 10 to 15 pips, that's not a problem. But the big trade here is going to be 55. So 55 in this zone, probably going to be a pretty good bid. Probably going to be a nice hot zone to bid. Now, big picture, and I'll just sort of show you what I think is going to happen. Once the Venezuela situation is resolved, and it will be resolved one way or another, there will either be military strikes or a trade deal or Maduro will step down or whatever. It will get solved. It looks to me like that's going to get solved in the next several months. If that's the case, you just put another major oil producer, you put their oil in the global market, especially if the administration down there is friendly and wants to do business with the United States, then you'll see things like embargoes lifted. It's just more oil. So we could definitely see some compression down around 55. But once this level breaks, you're going lower. You're going quite a bit lower. And I would say that you're probably going to bottom out somewhere down around 50, 51. 52.50 is a pretty good zone for me. But big picture, let's go back to our monthly. And I love this chart because nobody else does it. And so much time has gone by already, but nobody even looks at this chart. This is the monthly chart. There's the COVID craziness that wiped out a lot of mom and pop drillers here in the United States. They couldn't take the heat because crude oil went negative. This chart shows zero. That's not true. We all know that it went down to about negative $40 a barrel. And then what do you got right there? You're starting to see crude oil get established beneath that 60 or 38% level, right around 64.59. That's very bearish. That means that this uptrend in crude oil is no longer relevant. It's no longer strong. It's no longer valid. The bidders aren't there at every turn like they were. Like that right in here. I mean, this was beautiful. We bid this so many times, I can't even remember. So something like that, that's great. So now we're selling off. So we have to say, okay, where's the next port of call? Well, typically 50% would be on the table, 44, somewhere in there. I probably would discount that. Barring another pandemic, barring something really huge, I would discount that. I would say, nah, probably not going to trade beneath 50. So I would be looking at 50 as being the big round number here, the one that everybody's looking at. So the number's so obvious. Everybody knows $50 crude oil. Do we stay above it? Probably going to wash it out. I'd be looking for 47.50s and then a quick rebound up over 50. There's going to be, the entire world is going to have their back against 50, and they're all going to be long, especially if this number comes our way going into the spring. That's sort of the global crude oil dynamic. I mean, there's going to be a tremendous number of traders that are going to buy $50.50, $51, 50 and a quarter. I'm going to be lined up there at 50.09 to 50 and a quarter. Guarantee it, probably with big leverage. Love that trade. Can't wait for it. But it's $7 up the Q. We'll get there. I'm just not sure really when. I think December could definitely be it, especially if those rate expectations flip back. From now, we think there's a cut because Williams says there's going to be one. And now maybe we walk back those expectations, and that's a bearish market driver for oil. Now, big picture, really, really, really big picture. If the Venezuela situation gets settled and all of a sudden all that oil comes on the market, then maybe we could be talking about a $45 crude oil. Maybe we could be talking about a high 30s for crude oil. We really don't know. Right now, though, I'm fairly bearish crude. It's just the chance of the geopolitics getting involved and shooting the market to the upside is really what's got me, it's keeping me out of being awfully short. All right, everybody, I'm going to go ahead and sign off. I have a bad feeling that we dropped a lot of frames this stream, and it's glitchy. I'll watch it back, but I mean, we've struggled with Cloudflare all week long. I noticed my live chat doesn't seem to be working at all. I haven't seen just hardly any messages, and usually we get a lot of folks asking questions. So if you had a question and you asked and I didn't answer, it's probably because I didn't see it. So the chat doesn't look to be working. Over here in the How to Trade trading room, that looks to be working pretty good. So absolutely, Tuku, you're welcome. I'm going to go ahead and sign off for the week. We're going to be back on Monday. Go ahead and check out your trading schedule, your trading room schedule here in the How to Trade trading room. If you want to send me a message, head on over, send me a private message, and I'll be sure to get back to you in short order. Next week, holiday week, short week. Thursday, you sort of have a market closure there. Black Friday, I've seen movements. I've seen markets crashing on Black Friday. So I'm going to get you all prepped up and ready to go Wednesday. We're streaming Monday, Tuesday, Wednesday, and then we'll be off Thursday, Friday, and then we'll be coming back hard for December, the first part of December, to make sure that we get our licks in before the new year. All right, everybody. No one here on the chat. A few guys gone. Well, there you go. That's fine. All right, Tina, have a fantastic time. I am going to have a great time at the game. Go Grizz. I know there's a few Grizz that usually check out these live streams. So definitely you guys play a great game tomorrow. You've had a fantastic season. Montana's 2, Montana State's 3. They're playing for all the marbles. It's going to be a lot of fun. So I can't wait to get out there, get down to the stadium and get it on. It's going to be great. As far as everybody's conduct over the weekend, I will be in the stadium, but I probably am going to be monitoring crypto as well because this Bitcoin and Ether things really got me thinking. Thanks, Tina. Go Grizz. All right, everybody, have a fantastic trading day. Finish up strong. Don't give anything back if you've made money. If you haven't made any money, come back Monday. Have a great weekend. If you're trading crypto this weekend, keep an eye on those levels. And if they fall away, if this market really turns into a crash, it can get very ugly. So be very careful. All right, everybody, I will lose my voice tomorrow. Yep. It's already hoarse, but yeah, it'll be gone by tomorrow night. Guaranteed. All right, everybody, have a fantastic trading day. Thank you for joining me this week. It's been a lot of fun. We'll be back next week with our holiday coverage, and we'll get back after it. Have a fantastic day. Trade the action well, and we'll talk soon. See you.